Welcome everybody. Seems it's been a long time since we've done a lunchtime live. Hasn't been that long, about a week, but welcome all you AAAers. Hope you're ready for a quick 15 minutes on business risks. So let's get started, shall we? So what we're going to look at today is the definition of business risks, the exam focus, how is it examined, what's the different types of business risk, can you give me some common risks, and what sort of techniques do you need for the exam? And we're also going to be doing a past exam question as well. So we've got loads of stuff for you today. Let's get on then. So first of all, the definition. So it's a risk resulting from significant conditions, events, circumstances, basically things that could adversely affect business. Okay, so things that might make you less profitable than you otherwise would have been. Simple as that, really. And the reason why that's important to us is because eventually these circumstances, these events that make business worse will have financial consequences, make business worse, and affect the financial statements which we're auditing. Okay, that's the definition. All you've got to remember is I'm looking for things that makes the business worse, potentially. So we've dealt with the definition. Now we're going to have a look at the exam focus. So we're going to look at marks, and it's going to come up in section A. And a typical requirement is using the exhibits provided, evaluate the business risks facing the company or the group. Really typical question, hardly gets asked in any other way. So what you've got to do is you've got to identify the risk and explain why it is a risk. And you'll get 2 marks for each of those. If you just do the identification, you're only going to get half a mark. If you just briefly explain it, then you'll probably get a mark. So what you need to do to get both marks, you need to identify and explain it well to get your 2 marks. And that's what I'm going to help you do this afternoon. Okay. So we've done the definition. We know what the exam focus is like. We know it's 2 marks per risk that we've identified and explained. And then I thought I'd just show you types. Not that you need to remember these. You never get examined on these, but just sorts of things that can happen. They can either be financial risks or operational risks. And so it could be, it's a going concern risk because your profits aren't as good as they once were for some reason. Could be interest rates are going up, and so that could really affect your business because you've got lots of liabilities with interest payable on them. Could be that you've bought a company and that company has some liabilities that we didn't know about in it. There could be operational things like you're losing key staff. It could be that you're losing customers. Or it could be more a compliance issue. But anyway, I'm just giving that as examples, really. So we've looked at the definition. We've looked at 2 marks per well-explained point. We've said, look, to help us, we can think financially, we can think operationally. And then I just wanted to give you some common risks that often come up, really. So things that you're looking out for. Over-reliance on a single supplier. What happens if that single supplier puts his prices up? Okay, we can't really do much about it. What if that single supplier stops? What happens? Maybe we're a big multinational, but we've moved into a smaller country and we're not complying with the local laws. That will affect our business, won't it? What if we're rapidly growing, which is fantastic, but management won't have the time or the ability to deal with it? That would affect our business badly. What about if we're over-dependent on a few key customers and they shop elsewhere? What if we have lots of complaints? That's going to affect our reputation and our long-term standing. What if we get a new system? Obviously, there's going to be possible errors. Now, these are just common risks. These are, it's not an exhaustive list. It's just to give you an idea. So, as a reminder then, new foreign currency risk, yeah, if you go to a new country. So as a reminder, what have we done? We've looked at definition, exam focus, 2 marks per well-explained point, different types, financial, operational, compliance, that sort of thing. Looked at some common risks. And now we're going to have a look at some techniques that we've got to use in the exam, because that's the key thing, isn't it, really? So these are what you get told by every tutor you've ever met, and because it's true, you have to be specific to the scenario. So don't learn those common risks and go looking for them. Be specific to the scenario. Use full sentences, don't use bullet points. Now, analytical review often helps if they give you numbers, but the next two are the key ones. I want you to explain how the risk affects the financial statements. So, you'll see it in a minute, but that's what you've got to do. You've got to explain how it affects the financial statements. And then you've got to prioritize them based on how big is the effect based on the financial statements and what's the probability of it happening. The higher the probability, the higher the size, the more priority you give it. So the higher up in your word processor you put it, then you can just copy and paste and pop it in. Okay. December 24. Are you all still with me? Are we all still happy on this sunny day? Hopefully we all are. We now know as much as there's needed to know about business risks. What we've got to do, though, is use December 24 to answer this question. Using all the exhibits, so you can't just rely on one. Evaluate the significance. What do you think significant means here? I've already told you, if you think about it, I've said ones that are big, size, and ones that are likely to happen, probability, to be considered in planning the audit of this group for 8 marks. 8 marks, how many well-explained points do we need to write, therefore? Hopefully you're shouting at the screen, 4 points, Richard, because there's 2 marks per well-explained point. We're not going to do all the question. I just want to introduce the techniques and how we would do it. So this is one of the, let me move myself completely out of the way. This is one of the exhibits. So Hart owns a number of theatres across the country. Each theatre is hired out, basically. The group's theatres are mainly old buildings, historical sites with protected status. And we get permission from the authorities, regulatory authorities, regulations. We get permission to refurbish the buildings, but only if the historical features are maintained. And actually, in the past, the regulatory authority has taken legal action where these rules have not been adhered to. So if they take legal action, what are they going to do? Hopefully you can see they're going to fine us. So therefore, will that affect the financial statements? Yes, it will. There will be a fine and our business won't be as good. So that's a business risk. So we want to be looking at that. Okay, many of these buildings are in a poor state of repair and basically need a lot of investment. Okay, so how likely is it that we're going to have to pay these fines? That are we going to upset the regulatory authority? Well, we don't really know. So that's where consider all exhibits. So you go looking at another exhibit and think, haven't got enough information now. But in another exhibit, it said this. It said during the year, we spent 20 million on repairs and upgrades. So you think, okay, did they get permission? This included replacing seating and creating easy access seating, okay. But here we go, the permission. The permission to modify the building was not obtained prior to the work taking place. So therefore, is this a significant risk? Yes, it is, because it's likely, potentially, that we're going to get fined, aren't we? And it says, in the group are in the process of trying to get retrospective permission for these modifications. Okay. So this is how I'd answer it. I'd head it up, a heading, laws and regulations. Could just call it regulations if you like. There are concerns surrounding compliance with historic buildings regulations after works were performed without proper permission. Is that an identification mark or an explanation mark? Hopefully you all agree that is an identification mark. Okay, so that's half a mark already. All you've done really is copied it out, the question. Then I've gone on to say the regulatory authority in the past has taken legal action. Why am I saying that? Why am I mentioning that? Because it shows that this is likely to happen. This is not just a threat that we're not really worried about. By the way, if you do get a business risk where it says that we've mitigated against the risk, it's not a significant risk then. You've mitigated against it. Here, we've tried to mitigate against it, haven't we? We've gone for permission after the event. But anyway, the regulatory authority in the past has taken legal action where rules have not been followed. And therefore, if the modifications have been carried out without due consideration to the historical features of the buildings, which is what the permission was for, it could have serious consequences for the group. So you're explaining your point, and if I move myself out of the way, breaches in laws and regulations could lead to large fines. Now I'm saying, look, this is the effect on the financial statements. It could lead to large fines, legal action, maybe even the theatre closing, with a significant detrimental effect on cash flow and profitability. Will I get 2 marks for that? You bet your bottom dollar I'll get 2 marks for that. Okay. Let's keep going. This isn't hard, is it? If you go through it step by step. What else have this company done? Well, they've acquired 100% shareholding in this other company. Okay. This is the first time we've ever bought another company, and it was completed very quickly. Okay, so you think, this seems to be like some sort of risk then. Maybe this company's not as good as I think it is because I completed it very quickly, maybe. No final due diligence report has been made at all in terms of the financial and operational viability. So we don't know how good this company is, and so therefore is that a business risk that we've gone out and bought it very quickly without doing our due diligence? Of course it is. Big risk, isn't it? Okay, so how would I go about answering that? I'd head it up, first time acquisition, and I say, look, they made their first acquisition during the year. There's always a risk that returns and the company aren't as expected because we were over optimistic or we didn't integrate the new business as well. Okay, is that an explanation point or an identification mark? Identification, isn't it, really? Half a mark. Now I need to explain it well. There's also a risk that management attention is too focused on the newly acquired business, and there is a deterioration in performance with the existing business. Maybe we'd have got that. I'm not sure I'd have written that, but maybe I would. I don't know. This is made worse by the transaction being completed quickly and no final due diligence yet. So I'm explaining the point. And then finally, I'm saying, look, this is the effect on the financial statements. This group could become exposed to unknown issues or unknown liabilities that the newly acquired theatres have that we didn't know about because we didn't do our due diligence. So overall then, I've explained the point. I've identified the issue, haven't I? Explained it, said what the effects on the financial statements are. I've done everything the examiner's asked me. 2 marks for each of those. So there's 4 marks out of the first 2 things. That's the only 2 I'm doing with you because it's really quite straightforward once you get going. One thing I did want to ask you though is which of those 2 would you put as having, if you used to prioritize them, how do you prioritize in the first place? Hopefully remember it's the size of the issue and the probability of it happening, isn't it? So bit tricky with these 2. I think probably I'd go for the legal and the regulations one first because we actually did do something wrong, didn't we? I know you could argue here we didn't do our due diligence, but the company may be fine. It might be, totally okay. So I would say just slightly more priority would go to the regulations, but I think that's a bit flexible, to be honest. Okay, so that's the end of today's Lunchtime Live. I hope you enjoyed those 15 minutes. Really hope it was useful to you. If you get a business risk question now in the next exam, you'll be totally well prepared. So thanks ever so much for watching, and do keep your eye out for more of these Lunchtime Lives, and see you soon.